How long will it take for Hasbro, the huge toy maker, to get past this collapse of Toys R Us, which finally shuttered all of its U.S. locations a few months ago? This morning, Hasbro reported a pretty suboptimal quarter. Company earned only $1.93 per share. The Street was looking for $2.23, 30-cent miss. Sales also came in weaker than expected, down 7% year over year. Toys R Us did a lot of damage, but the company also got hurt by overseas with a strong dollar, and a lot of inventory that had to move. It seems pretty clean. While Hasbro has some lucrative partnerships with Disney, including both Star Wars and Marvel Comics, those businesses declined dramatically because there were no major releases, and that's why the stock, I think, shed 3%. On the other hand, the company announced a major restructuring to help contain costs. As I mentioned, they told us that inventories are down significantly in the U.S. and Europe, which is exactly what we want to hear as we head into the holidays, because tight inventories translate into stronger pricing. So has the Toys R Us related weakness been baked into Hasbro here? Is it safe to start buying the stock at these levels? Let's check in with Brian Goldner, the chairman and CEO of Hasbro, get a better sense of the quarter and where the company's headed. Mr. Goldner, welcome back to Mad Money.
Hey, Jim.
All right, so, Brian, there was a lot of fear at the beginning, but then I think you've been saying to us, look, there's still going to be some noise. At what point will the noise go away and you will go back to what I think was some of the great forecasting that you've always done before Toys R Us?
Well, Toys R Us, for us last year, this was our largest quarter, Q3, followed by Q4. So as we get through the holidays and into 2019, we've said we'll return to growth and profitable growth as we expand operating profit margins absent one-time costs. And again, as we go forward, we'll be beyond the Toys R Us issue. So it had to get through 2018.
Okay, so let's talk about some of the things that are going to that really stood out, because I think that everyone knows about the negatives already. But we'll go back. Play-Doh, something good with Play-Doh.
Yeah, Play-Doh is grown quite well. In fact, using a lot of social media listening and scraping, we're really looking at how the audience is playing with the brand. It gives us a lot of insight, and we move very quickly. It's a brand that's expanded across this expanded channel strategy that we're employing, so all kinds of retailers can get involved in that creative product, and it also goes global. So we have a team leading the innovation here, and we're very excited about where we go with a brand like this.
Okay, also, I mean, when you say that the inventories are lean, I really want people to understand there had been a lot of what toys so-called in the channel. It looks like, I know you can't just say, listen, we're done with Toys R Us, but things are better than they were 3 months ago.
Oh, no question. In fact, in the U.S., our retail inventories are down 17%. In Europe, our retail inventories are down more than 20%. And really, the next quarter is the last quarter where Toys R Us has a meaningful impact. We're waiting for some resolution to Toys R Us Asia as the two partners work out a new arrangement in China. And then we move forward without Toys R Us. But, you know, around the world, we're adding so many new retail channels. Our U.S. team has added 10,000 doors in the last year and 21,000 doors in the last 3 years. These are all kinds of new retailers that are out there. We're shipping all kinds of new product based on a product development strategy that allows us to make great product at every price point for any consumer. And that's where we're going this holiday season, is with a lot of new kinds of retailers as we continue to build the business, and they want to capture the share that Toys R Us left behind.
Now, do we have to be concerned? We're a little bit, let's just say we're flummoxed by when companies source a lot in China, whether there's big issues up ahead. How do you feel? Can you give us some comfort that China's not a terrible place to have toys made?
Well, first and foremost, we also produce 25% of the revenues we do in the United States in the United States. We just brought Play-Doh production back to the U.S. Overall, we produce about 70% of our product in China, but we've been moving production out of China. In fact, in the next 2 years, we should be down to about 60% out of China. And I, thus far, have heard in working with the administration that we are being a good actor and a good player, and we expect that the business will be fine coming out of China. Go forward, we don't expect to see any major tariff situation.
All right, that's good to know. Now, partner brands declined 37%. Is that just a kind of just a hole in the lineup because nothing new was introduced?
Well, we do have year over year. We're just comparing to a year ago. We had the Star Wars movie. We also had a lot of entertainment around Disney Princess, Beauty and the Beast, Moana, and other brands in the Princess and Frozen lineup. So you're just comparing year on year that you don't have those entertainment initiatives this year.
Okay, now, I went on I Googled Transformers Bumblebee. It sent me right to Amazon, and it was basically, it looked like an Amazon product, so to speak, but it's yours. Now, do you make good money when I buy something on Amazon like that?
Absolutely. Our cost of business with Amazon and other retailers is quite good, and we're very agnostic about how we grow. I'm glad to see that you went online, and what we're doing increasingly as we become more modern and agile as a toy and game company and a modern play company is we're doing those shoppable social pieces of content. So when you go online, you find a product or you might find a short video, you can click right on that video and buy the product at your favorite retailer in 1 or 2 clicks.
Now, I want to be sure that people understand that you've become very much an entertainment company. One of the ways I look at that is when I look at what you guys are doing with Fortnite. What you're doing, Frank, Overwatch. I mean, if you could speak to that, people understand this is not the Hasbro that we had 5 years ago. As much as I liked it then, this is better.
Well, we're first launching a Monopoly Fortnite. Thus far, it was the #1 new item in the games category just in the first week of the 4th quarter. And then for the spring, we have Nerf Overwatch coming, where you get to play the game for real, live, obviously making great blasters and role play so you can play as your favorite character. And then that will follow with Nerf Fortnite, which comes both in the first half of 2019. So it's very exciting. You get to jump out of the game and play for real.
Well, I mean, to people, it got lost. I mean, a lot of people, when I was listening to the conference call, I mean, to me, this was the most pertinent thing because I've seen what it's done to Activision Blizzard. Obviously, we know Take-Two with Strauss Zelnick. No one puts Hasbro in that category. After I read this conference call, I started thinking that you should be considered as part of that group.
Well, in particular, as you look at what we're doing with Magic the Gathering and our new Arena product, which has gone into open beta, what we're really offering that audience and that consumer and that gamer is the opportunity to play in a digital space. We built that product ourselves. We're publishing it in open beta. It's really exceeding all our expectations. We're getting great feedback from our gamers, and we'll roll to an official launch early in 2019. And as we go forward, you're going to see a suite of mobile and PC-based games for Magic the Gathering, as well as Dungeons & Dragons, and Wizards of the Coast is really activating our whole activity in that space. And the other thing about Magic the Gathering that's fantastic is it's been a competitive card game for so many years and a tournament-based game, and that allows us to go into esports. It really gives us an opportunity, and you'll see an announcement from us shortly talking about how we're going to enter into esports in a major way.
All right, that is excellent. I know the stock acted much better than I think a lot of people thought it would. That's because a lot of us knew that it was going to be a tough quarter, but better things are ahead. Thank you, Brian Goldner, Chairman and CEO of Hasbro. Great to see you, sir.
Thanks, Jim.
Look, I remain convinced this is the best. It's the only one left in the whole darn thing. I think Mattel's got real issues. Hasbro got great balance sheet, got a great future for 2019. Mad Money's back into it. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.